The dangers of purchasing business trade lines. There are no shortcuts in life. The same is true about building business credit, yet some people will try for a shortcut all the time. The top 3 areas where they try to game the system are buying trade lines, CPNs, credit privacy profile numbers, and buying shelf corporations. We'll look at trade lines. What does it mean when we talk about buying business trade lines? Legit business trade lines are lines of credit extended to businesses by their vendors. The business gets goods or services and agrees to pay for them at a later date. Trade lines are often established between a business and a vendor. This is as opposed to a line of credit offered by a bank. Using trade lines can help businesses build credit since the loans are frequent and the turnaround quick. They can also help rapidly build positive credit experiences. There are many companies online which promise they can sell seasoned trade lines. If your company has poor or little credit, you can, for several hundred or several $1,000s, have your business piggybacked onto the account of someone who has established excellent credit. This allows new business owners to seem to be more credit worthy than they really are. Does this sound unethical? Of course it does, because it is. What does it mean to piggyback a trade line? Piggybacking trade lines is a practice involving seasoned trade lines. It uses a creditworthy borrower's accounts to improve the credit of an unrelated third party. A creditworthy borrower adds the third party as an authorized user of his lines of credit, but he or she does not actually provide the third party with materials, credit cards or account numbers, etc., that would permit the third party to make charges against that account. So the authorized user never actually uses the credit. How does piggybacking benefit anyone? The benefit of the third party is an improvement in their credit rating. It shows they have already been approved for other higher limit revolving accounts. In theory, showing you already have credit is supposed to make you more creditworthy for higher limit accounts. Many companies claim to be able to secure $100,000 to $250,000 credit lines once these accounts are reporting. This is dishonest. How do piggybacking companies work? A company offering the piggybacking service maintains a network of creditworthy cardholders or vendors. They stand by ready to add strangers to their accounts as authorized users for a fee. A third party looking to increase their credit score contacts the company. The company then offers a selected trade line to the client and charges the client a fee per account. The FBI has found that the trade line company can be a fake, and the primary cardholder can be a stolen identity in these kinds of scams. The client pays a fee. It can be anywhere from $500 to $2,000 per trade line. The company submits the order to the cardholder. Once the trade line reports, the company pays the cardholder their fee. This is anywhere from $50 to $250 per authorized user. The company retains the remaining funds as revenue. Personal credit is different. Consumer trades as an authorized user are considered legitimate. A person with poor credit can use this strategy legally. Hence, if you know someone with great credit, ask if you can become an authorized user on their card. You never need to use the card, yet it can still help you raise your personal credit scores, but never your business credit scores. What does the FBI say? When commenting on a 2013 bust of a fraud ring, a second kind of trade line is the authorized user trade line, where a credit card holder adds another so-called authorized user to a credit card account. This raises the credit score of the authorized user, who inherits some of the primary user's credit history. Some defendants created and sold fake lines of credit for false identities made up by other defendants. These fraudulent primary trade lines were then used to increase the credit limits of fraud cards so that the defendants could reap even larger profits. Defendants used the authorized user trade lines to create new identities. See the following website. The leader of the scam ring was sentenced to 80 months, that is over 6.5 years, in prison in 2016. Click this link for the story. What does the Federal Reserve say? The potential distortions in credit scores that piggybacking credit may introduce suggest that a reconsideration of existing regulations, industry practices, or both may be warranted to preserve the predictiveness of credit scoring models. Credit Where None is Due, Authorized User Account Status, and Piggybacking Credit by Robert B. Avery, Kenneth B. Brevoort, Glenn B. Canner. Federal Reserve Board, March 5, 2010. Click the link to learn more. What does a former D&B employee say? Opening a business credit account with any company is free. If you are paying for it, you are being ripped off. When the company who sold that trade line to you gets taken down, all of their clients will get punished too, with a mound of debt and a cursed credit file that will keep you from getting more credit to be able to pay it off. See Joy Greenwood, 10 Common Trade Line Mistakes, June 5, 2015, at the link below. What does FICO say? A shadier version of piggybacking has been promoted by some CROs who offer to rent to their credit-challenged customers the trade lines of established account holders in an effort to boost their customers' credit profiles and scores. Click the link to learn more. What does Equifax say? Authorized user abuse occurs when low-risk primary card owners rent their trade lines with extensive credit histories, high credit limits, and solid repayment profiles to others, most times knowingly to fraudsters. Click the link to learn more. What does Experian say? Synthetic identity fraud is an epidemic impacting all markets. There is a strong focus on new and underbanked consumers, which can pose a large threat to your onboarding and customer management policies, and most importantly, overall profitability. Click the link to learn more. What does NAV say? Rarely does this turn out to be what it seems. The established credit lines may not be the type of funding the new business needs, and if lenders catch whiff of the new business owner trying to take advantage of this scheme, they can quickly shut those accounts down. It's usually shady, says NAV CEO Levi King. See www.nav.com/resource/business-tradelines. Unethical methods don't go undetected forever. Lenders and CRAs are well aware of all the unethical methods out there. They know what to look for, and they will always be looking. When they see a change in company ownership or a new authorized user on a card, they will dig deeper. It will catch up to you. Sooner or later, D&B will figure out you bought trade lines. If a trade line sales company inquires into your credit report, then D&B is tipped off. And anytime you buy a trade line, the seller will check your credit because they want to be sure they get paid. Dun & Bradstreet has their own methodology. Shutting down the trade line or trade lines is just the beginning. D&B will red flag your entire profile, so you might have legit trades, but D&B will flag them anyway. You will lose whatever time you think you gained when you bought trade lines when your profile is red flagged. Plus, you're out of the cost of the trade lines. Years later, it can still come back to haunt you. Think you can relax if they haven't caught you yet? Think again. Once a company is known to be a trade line seller, then that company will be flagged. So not only will any new inquiries by that flagged trade line seller harm the buyers, so will older trade line sales. There is no statute of limitations on this because it's not through the court system. If you bought a trade line 50 years ago, D&B could still find out. Let's recap. There are no shortcuts to success. We know fast and legal ways to build business credit. You will probably hear about some less than ethical ways to build business credit. Experts at the FBI, CRAs, and the Federal Reserve and more all say that no one should do this. CRAs and lenders are onto these unethical tactics. Don't fall for these scams. Buying trade lines is unnecessary, and if you're going to spend the money, why not just build business credit correctly? Contact us today to learn more about the dangers of purchasing business trade lines.